It's about that time of day again. My name is Joseph. Tuesday evening, October 23rd. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. Tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a spike and range pattern tonight. So the plan for tomorrow is to fade those bull breakouts going back into the range. The S&P is bullish and running back into yesterday's range, and my plan is to look for buying opportunities, and I'm watching a key measured pullback in combination with a key support level for buys going back into that range tomorrow. Nasdaq is also bullish with a pendulum swing coming off the low of yesterday's spike and channel, and I got my eyes on buying opportunities off the low of a hidden channel tomorrow morning. Gold is bearish, and with the buyers trying twice to buy the most recent pullback, I'm looking for ways to sell into their stops for an easy run back to those lows tomorrow. And the euro is also bearish, this time with a flag pattern tonight. So the plan is to find those selling opportunities up around the high of that channel tomorrow morning. Boy, speaking of tomorrow morning, we got some big news on the schedule tomorrow. We got some big moves in today's session, and we have a great plan to capitalize on what was a very busy day today with some big opportunities for Wednesday's session. But before we jump in and put the plan together for Wednesday, I need to remind you, if you're watching me tonight on YouTube, don't forget you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of this YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do, make sure you hit that bell notification icon so you get notified every time I post another video. And of course, don't forget, if your goal is to become a consistently profitable trader, make sure you join our mailing list by giving your name and your email address, and I'll shoot you an email every time I publish something new. You can also download all the charts that are referenced in tonight's video. If you're on the blog here, it's right below the video on the blog. If you're on the YouTube channel, it's linked up in the description of that YouTube video. And don't forget, if you have any questions about anything we talk about tonight, if you want to get started as a brand new client, free trial, free pass, free course, any questions you guys have, make sure you use that toll-free number in the upper right-hand corner. We also have live support. And don't forget, you can always post those questions in the comment section below. All right, great to have you guys with me back here once again Tuesday evening. I know we're pressed on time. We got the game going on in the background right now. Thank goodness for the DVR recorder. I'll go watch the game after we're done here, but in the meantime, we got to get ready for tomorrow morning session. Tomorrow, we finally start seeing some news come into this week. We've got some news tomorrow morning at 10 a.m. and 10:30 Eastern Time. The big news tomorrow is going to be those new home sales. We have seen a lot of pullback, basically a very cold snap here now on the housing market in the U.S. The housing market is a big leading indicator for what's coming down the pipe, and you know everybody's going to be looking for some surprises tomorrow morning. So 10 a.m. Eastern Time, everything should be impacted by this tomorrow, especially the equity indexes, the Nasdaq and the S&P. So keep your eyes open around that 10 o'clock Eastern Time. I would assume tomorrow that's going to be the big market moving time of the morning. And then of course we have that weekly inventory report, right? If you're a crude trader, you know, this is kind of the only thing I don't like about the oil market. I love crude oil. I love its price action. I love its $10 per tick. I love it's so simple to trade. It's very easy at 1 penny per tick. Very great market. I love the market. One of my favorite markets. But every Wednesday, we have that smaller window of opportunity. 10 o'clock Eastern Time is about as far as I'll take it on Wednesdays when trading oil, right? This is obviously talking about crude oil right now. This won't affect the other markets. So if you're a crude trader, get to it early, get out of there early. And then what I always do is I always wait until about, let's say 10:40 10:30, 10:45, right after that news comes out. Give it 10 minutes, and then sometimes we get lucky and we can find a new direction. We have enough structure to find a channel, a measured move, and we can put the plan together. Oftentimes, though, that news comes out at 10:30, and it's just all hell breaks loose, and it's very difficult to find any real structure to really lean on to find any reliable trades. So it's really much of a toss-up after that news comes out at 10:30. So I always say, get to it early, right? Get to it early. That's always where you're going to get the best trades if you're trading crude. But everything else, though, is definitely fair game tomorrow, especially with this big drop we saw today. And for most of it, right, that short covering rally that we're experiencing going into tomorrow's trading session. Now, speaking of tomorrow's trading session, don't forget we're opening up tomorrow morning at 8 o'clock Eastern time, and we're going to execute this particular strategy together with all of our clients. So don't forget, the markets can be kind of complicated. It's always easier when you got somebody to trade with you, with a plan, with experience, and really help you do the job correctly here. I love to trade with you every day as a brand new client here at School of Trade. Let's jump right in, though. We got crude, S&P, Nasdaq, gold, euro. Let's do this. Starting off tonight with oil. Oil is bearish, obviously, right? I'm sure you didn't need me to tell you that. We're bearish right now, right? Spike in range and a hidden channel on the chart this evening. The bears obviously here have that momentum. So my plan is to find selling opportunities using levels of resistance overhead. And with today basically being straight down, right, into this trading range, the only real technical levels we have right now to work with are going to be finding this hidden channel, right? That's going to be a technical level of resistance. And of course, we had kind of this kind of spike high here, right? The kind of spike up there, that will be a level of resistance. So really, there's not a lot to cover here on crude. Again, we're obviously bearish. There's no way I want to buy this market right now. Tomorrow is the weekly inventory report, so maybe we do get a reversal tomorrow, but we are way, way ahead of that right now. I think the biggest challenge tomorrow is going to be the combination of a likely range into the weekly inventory report. Now, if you watch my nightly newsletter, you've heard me say this many times before. Whenever we see a market move this far, this fast in one session, the next day is almost guaranteed to be a range, and a very quiet range at that, because nobody dares buy this market, right? You're suicidal trying to buy this thing right now, right? And as you can tell, nobody's taking profit, right? Nobody believes any rallies right now. So we can't buy it. We're too low to sell, right? We're too bearish to buy. Right now, we're going to stay patient and wait to fade those moves higher. Anytime we have a trading range with a bear bias, the plan is pretty simple. I'm going to use this 2-try failure pattern, which I talk a whole hell of a lot about in our free trading classes, which I'll link up right in the upper right-hand corner right now. If you're brand new here to this newsletter, or maybe you've been watching the newsletter and you haven't taken advantage of the free trading class yet, I'll link it up in the upper right-hand corner. I'll also put it in the description in the video. It's also an uploaded video on our blog as well. But we talk about this nonstop, right, in our free trading class. It's a bear market. I want to be a seller. The easiest way to sell right now is to let this market try to go up, let it run into resistance. I'm not going to sell this because that momentum going higher will oftentimes have the buyers now trying to buy the pullback. So look for is, I want to see it go up. I'd like to see a nice big push higher here. Let those buyers now try to buy that pullback, right? And then we look for that second attempt now, one attempt, two attempt. We look for that second attempt now here to fail back down, and we're looking for that nice strong signal, right, to sell back down into that trading range. What happens is when we get these strong breakouts, the reason why I don't want to just sell this is because you're probably going to see him try one more time to run it higher. So what happens a lot of times is if you try selling that, your stop goes right above that high, and you know what's going to happen. They're going to go right back up, stop you out, pick your pocket, and then drop it right back down in. This happens all the time. You can see a little example of it here, right? One try, two try, back down in, right? You don't want to try to sell that first try because that momentum will try to run you out of that trade. One try, pull back, two try, and we're trying to sell this sucker, right, back down in. Now, if we get lucky, this could turn into a two try failure into one of those hidden channel pullback patterns. This is one of my favorite combinations here. We may not get it. It's inventory day tomorrow, but this is my favorite combination patterns, which is the one try, two try failure pattern. And then, of course, into mark up that swing, mark up that new channel, right? And we're going to sell off that level right there. That will be great if we can get it tomorrow morning. Again, I kind of have a little bit low expectations for tomorrow just because of this just run lower and with inventories being at 10 o'clock Eastern time. But that's the goal here for tomorrow. Now, a couple things you also want to keep in mind is what does it look like if price goes lower? This is always one of the hardest parts about a big move down like this is it's very tempting to try to trade breakouts going lower. The problem is that we've got to, because the market moved so far so fast yesterday, it takes some time for the market to kind of catch up to this. So really at this point, I want to sell it as it goes higher. If it goes lower, I've got to be really careful about these kind of fake out breakouts to the downside. If it goes lower though, what I'm looking for is strength. I want to see a strong move down. I want to see this moving average. What will usually happen, the most reliable trade you're going to get if it goes lower is usually going to be something like this, where it'll run lower. We can grab that low. We can grab that low. The moving average has to get down below that 74. That's always the easy trick. Get that moving average down below that low. And then with that new high, right, we can then sell off that high and go from there. But remember, it all starts with that strong leg lower. That sets the table for that momentum, and then we can look for that one, two-legged move, right, down to a new target as we go. So just be careful trying to sell those breakouts down here because you're selling low, and oftentimes that'll jerk right back up into that trading range. Can you buy that? What would be the plan to buy that? How would we want to buy that low here? We talked about the two try rule, right, above that high. Can I apply that to the buy side too? You can. The problem is it's bearish, so it's not going to be as reliable. Rather than trying to use the one try, two try failure pattern to buy back into the range, what I like to do is use that combination setup. Look for that. Look for the failure, get that momentum running higher, then mark up your new channel, find that support, right, and buy it off that. I've learned that lesson way too many times because what happens is you go, oh, one try, two try, you go, oh, this is easy. I'll just buy this right here. But what happens is we get just above that high, and guess who's waiting up here? Yeah, the sellers are up there, and they're waiting to sell this, right, as a trap, just like they did right back there. So it's very, very difficult to buy this until you get that momentum running higher. So get that momentum running higher, mark that high, mark that, right, that new channel, and then we're looking to buy that pullback, right, as we go. Now, the next question that's on my mind right now is how do we turn bullish, right? What does a bull market look like as we try to go higher here? We know that we're trying to fade this move higher with that two try rule, but that's where the market could turn bullish. And honestly, from seeing today, I hope it does, because that's going to give us the ability now to try to go all the way back into that range. Now, let me repeat this right now. There's no plan right now for being a buyer right here. We have to see some sort of momentum shift. Look left. This is not a bull market. So to buy this market, we need to see something change. So we got to see the first move up. That first move up needs to be strong. We're going to pull back to that moving average. Keep in mind, this is where professionals are waiting for that failure back down, right? So be very careful trying to predict this breakout. I'm going to wait for that strong run higher. I know what you're thinking. But Joe, wait a second. You mean I can't trade that break higher? That's always where the big money is. You're exactly right. It is. And any time, well, you got to remember, there's always going to be this balancing act between profitability and probability, right? Money on the right side, right? Percentages, right, on the right side there, okay? Now, the more money, right, the more profitable trades are going to have a lower percentage, right? It's going to look like this. Oh, come on, Joe, right? That lower percentage will look like this, right? So if you want, right, if you want to find the biggest profitable trades, the percentages are not going to be very good. So you're right, buying this pullback right here, absolutely, if you can pick that bottom, there's a lot of money to be made. But I'll tell you right now, there is a graveyard, right, of new traders who've tried to pick bottoms and they never survive long enough. You've got to remember, this is a numbers game here. We're not here to try to hit home runs. We're here to find reliable trades. What I'd rather do is tip that scale in the opposite direction here, right? Let's go for a little bit less moolah and let's go for a much higher winning percentage. What would that do? Right? Because in my eyes, it's all about winning percentages. See, this reminds me when I was a rookie. When I was a rookie, I used to wake up every morning. I had horrible anxiety. I'm not joking. I would literally, on the way to my computer in the morning, I would stop by the little boy's room, right? And you know what? My dinner from last night. I had horrible anxiety because I was always worried about how much am I going to lose today? And more importantly, how am I going to explain this to my wife, to my friends? Because I told them I'm going to be a day trader, right? You know, they all know I'm not working a day job. I got to make this happen. And that anxiety was really, really nasty for me at first. I hired a coach. One of my coaches told me, he said, listen, you've got to, it's a balance. The more profitable trades are not going to have, right, the probabilities that you want. You want to find that balance where you've got that percentage, but it's worth it if you risk, if your percentages are higher, it's much worth it. It's worth it in the long run because it'll be more confident. It's less anxiety, right? It's less stress to your body. It'll be easier to trade. You'll get up in the morning, right? You'll get up in the morning excited to go find those patterns, you know, and I'll never forget that feeling, that shift from going from literally scared that when my alarm clock went off in the morning, you know, how much we're going to lose today? How do I explain to my wife, right? Now I wake up in the morning because I understand the value of probabilities, and I hope you'll take this to heart as well. But we talk about trying to predict this pullback right now. It's a low probability trade. Yes, there's money you can make on it, right? But no, it's not a very good winning percentage. It's about a 30% winning percentage. So if you have a stomach, right? If you have a stomach of steel, right? If you can kind of suck it up during 5, 6, 7 consecutive losses and still keep trading, well, I'm gonna test you to see if you're a robot, because most human beings can't do that. What I like to do is let's get those winning percentages higher. Let's get that winning percentage higher now by waiting for that reversal. We call these the 1, 2, 3 reversal, right? Wait for that reversal, and then once we get that 1, 2, 3 reversal, then let's find our entry. Mark up that high, mark up that new channel, right? And now this is a buy, right? That is a buy that has that much better balance. It's a much higher winning percentage. So you're no longer scared to take those trades, just wondering, is this one going to be the big loss, right? Yeah, it might not be as explosive. It might not be as profitable. But at the end of the day, we're not here to make all of our money right now, right? We work. This is a long, hopefully a long-term career that you and I will work together with, right? And my job is to help you do this the easy way, right? Not trying to run through brick walls, trying to run around them. So the bottom line is we've got to get that momentum shifted higher with that 1, 2, 3 reversal, and then we can look for those buys coming off of that low. And again, we got a huge incentive, right, to be a buyer up there. Go back into that 69 area, back into that range we came from. Right? Who knows, right? Again, tomorrow is that week of the inventory report. So I'm not expecting a lot, but I am expecting to see some opportunities tomorrow. So keep your eyes open, right, on the crude oil. Next up here, how about some S&P? S&P is bullish with a triangle, a hidden channel, a reversal line, and a measured move to work with tonight. The bulls have the momentum. That's pretty easy to see, right, on this short covering rally. So the goal is to buy support levels using my best entry patterns. And with the price trying to run back into that triangle that we talked about from last night, right? We're almost there, right? That 27.57 is the middle of that triangle. With us running back into that triangle, my goal is quickly here, let's try to find some buying opportunities before we get back up right into that triangle. And I got my eyes right now on a couple levels of support here. First of all, the one I really like is this combination of this measured pullback. Right, this measured pullback puts me right around 27.32. That is pretty important because it lines up right around this reversal line. I really like this area because you can see I can connect these two highs, bring it down to those lows. That creates a support level as well. So we're bullish. We want to be a buyer. We'd love to get this thing to pull back and then all the way back up, right, to finish off what could be a very explosive finishing touch of this short covering rally. As I zoom in on this for the S&P, my big thing right now is it almost looks like a flag, right, where we're coming back down like this. It almost kind of looks like we're going to get some sort of flag pattern here. So I really want to be aware of this trend line coming down, which makes my job relatively simple. I know where I want to look for the buy. I know I have a level of resistance here, which is probably going to continue. I'll update it obviously tomorrow morning with all of our clients in the trade room. But at this point now, it's relatively simple. We're hoping we get that two-legged pullback now. We go back into that range, and now at this point, I'm just trying to get back above that trend line and use that trend line, right, for that buy going back higher. Now, a lot of times what happens with these is it does this. It'll kind of overshoot. Let's pretend this flag develops here, right? It'll kind of overshoot. You'll see the two try. It'll hold the, like, see where I'm drawing it? It'll overshoot it. Then it will hold. Those are the gutsy buyers right there, right? These are the tough as nails, right? Steel in your stomach. Those are the gutsy buyers right there. They're buying that overshoot, right? Because they're reading this chart like a seasoned pro. This is going to be difficult for most traders because most people won't dare buy that. That will be the first buying opportunity. Again, I think it's a little bit aggressive. Personally, what I'd rather do is I'd rather wait now, get that moving average up, and then grab that pullback, right? That pullback now, that's going to be it'll be a lot less stress. You know, like I said before, you know, my job as kind of a coach, my job as a leader of our trade room is to help you do this the easy way, right? I don't want you to run through brick walls. I'm going to show you how to get around them. Much easier, much less stress. And you know what, again, these flag patterns can be difficult because you've got that trend line coming down overhead, and it can really be a challenging, right, environment if you don't know how to trade them. So we're trying to get above that trend line, right, and use it for that move going higher. So that's the overall plan there, right, for the E-mini as we pull back. Another thing I'm watching here is, again, a very strong move to finish off this session. I am going to watch and see if this does end up going sideways here. So keep your eyes on a possible double top scenario here back at those highs. If it does go sideways and we end up seeing double tops here, this just becomes a bull market into a range. We talked about a bear market into a range on the oil. It's the same thing. We look for that one try, that two try pattern, right? And we'll look for that again. One try below those lows, two tries below those lows, and we'll look for that buy going back up into that range. And again, I love this area here, right? I love this area, 35 to 30 area. That area really looks like a great spot there for us to trade with. Will it be a flag? Will it be a range, right? And don't forget, right, we're talking about these flag patterns here, getting back above in that breakout pullback. We're talking about that trading range with that two try rule. All of these patterns that I'm talking about, if you're looking for more information, I hope you are, because they're fantastic patterns when used in the right way. I've got that free trading course. If you haven't grabbed that yet, pause the video. I'll be here when you come back. I'm not going anywhere. Pause that video, grab that free course. There's a button right below the video if you're on the blog at Sideways Markets, right? And that'll get you hooked up into our free course. And we'll be able to take a much deeper dive, right, on that free trading course than I can do on this nightly newsletter. So that's the overall plan for the bulls here. What if we keep going higher here? right? What's the plan to keep going higher here? If we don't pull back, if we don't get the pullback, right, for that buy going back up, what if it keeps going higher? If it keeps going higher, keep an eye out for this as a spiking channel, and that's probably where we're going to see our best buys from there, right? So buying off the low, finding traps here, right? Trap into two-try failure pattern. These are going to be the best opportunities here if we keep going higher. So if we keep going higher here, again, we're trying to go back into that range. If we keep going higher, watch this wide channel. It may start to, right, really channel out. And if that's the case, if we do keep going higher here, I'll be watching for those opportunities here now to pull back. Let those sellers try once, try twice, and then we'll look for that failure, you guessed it, into that hidden channel pullback. Like I said, one of my favorite combinations here, right? That two-try failure pattern, two-try failure into that hidden channel pullback. And again, I mean, I can't even tell you how many times we see this little combination set up. You can see hundreds of examples of that failure into pullback setup inside that free trading course. What would it take to be a bear tomorrow? You know it, 1, 2, 3 reversal, right? For us to be bearish right now, we've got to see this thing strength, pull back to the moving average, and strength, right? Remember, balancing act. We want high percentage, and we're willing to trade a little bit of profit for it, right? So trying to sell that pullback right there, right? Trying to sell that pullback, it's not a very reliable trade. It just isn't. The market's bullish. Once we wait and get that follow through, because remember, if they fail here, we're going back up to retest the high. That's what I'm looking for tomorrow, right? That's where the money is tomorrow for the buyers. If we hold that pullback and run, that means buyers have walked away. I'm going to mark up that low, mark up those trend lines, find that channel, right? And we're looking to sell off that channel. And it should be a pretty easy move back down to retest that 92 quarter area, pretty much the bottom around 10:30 Eastern time right here this morning. So remember, the markets are bullish. Find levels of support. Don't think about even selling it until the market turns bearish. How do we do it? With the 1, 2, 3 reversal, then we'll turn bearish. And again, you want a deeper dive into all this terminology, all the stuff I'm talking about tonight, make sure you grab a copy of that free trading course. Now, here is a cool chart for us tonight. The Nasdaq is bullish with a spiking channel, pendulum swing, hidden channel, reversal line, and a measured move. Just toss it on top there, right, on this chart tonight. The bulls have the momentum, so my goal is to buy using support levels in combination with my favorite entry patterns. So really at this point, right, I'm looking for levels of support here right now. We've got that beautiful reversal line around 7,100. That is on my radar. And much like the S&P, I'm connecting these highs, and look at that, like a glove, right? That low. It's almost as if they knew the low and used that low to create the high, right? And that's how great that channel fits right now. If you were to add a midline to it, I'll bet that midline would just slip on in, right, like butter. And so it looks beautiful. It's a wonderful channel, right? Hopefully we can combine that 7,100 with that rising support. That looks like a great spot there, right, for that buy. And we're probably going to get something similar we talked about there in the S&P, right? One leg, two leg, failure, right, and then back up. Now, if we can get that buy off of this low, where's our target going to be here right now? That is what's really interesting about this pattern. Here's a great example. You know, we always talk about the fact that one of the things I'm always repeating in my trade room is who has the momentum? What direction is the momentum moving in right now? So here's an example. Here we have a bear channel. And right now, I'll bet there are a couple folks out there watching right now going, wait a second, Joe, why aren't we selling off the high of this, right? Why don't we? This is a channel, right? It's a bear channel. Don't you always say sell off the highs? I do, but look at the momentum right now, right? Take a step back for a second, okay, and ask yourself, and I always use the analogy of the tin can in the river, right? It's not a great analogy, but visually, right? If you were to toss a tin can, right, empty tin can, I don't condone littering by any means, right? Smokey the Bear would not like you for that, or whoever the littering mascot is. I know Smokey the Bear is forest fires. The bottom line, though, is I'm getting off topic. The reality is I always kind of visualize if you were to toss the tin can in the river, what direction would that tin can go? Right? You pull the sail up on the sailboat, what direction does it move? Right now, it's bullish. So while that tin can's floating higher here, I want to be buying, right? I can't be a seller yet. Now, if we can turn directions and start bearish with that 1, 2, 3 reversal, well then sure, now I can get that high winning percentage, right? And I can grab that sell on the way back down. So I'm always trying to ask myself, right? What is the momentum direction? That's why as I go over this list here, the first thing I remind you is momentum, right? Because in all reality, sometimes it's easy to lose focus on, you've got all these chart patterns. Okay, it's a triangle, it's a channel, it's a measured move. Sometimes it's easy to lose focus on just like what direction. Right now, it doesn't matter what the top of that channel. What matters is we have this huge pendulum swing happening right now where the amount of the move below that channel, right, is now setting up for a nice big run above that channel. So we were talking earlier about if we do get that pull back and we get that buy up here, where's our target? Well, it all has to do with when we go higher here. Bottom line is if we end up pulling back, let's just say here, right, and we go higher here right now, at that point, this pendulum swing is going to be a little bit lower, right? So what you want to think about is the pendulum swing will get locked in once it hits it. So for example, right now, right, if we're just messing around down here, that pendulum swing is going to keep on moving lower because I'm using the top of that channel. So let's just kind of say, for example, right, let's draw that vertical line down. Let's say we go down like that, right? Once we pull back, that's now my pendulum swing is, right? If we go up higher here, and this is obviously a lot easier for me to show you, right, in our trade room tomorrow, but if we end up back down, we run higher here now that pendulum swing measured off, that level's probably going to be a little bit lower. Right? So the pendulum swing will keep on moving down the top of this channel, right, until you hit it. Okay, makes sense? It's a dynamic target. It's not locked in at that 21, right, 21 even. That's why it says, to be determined, right? So just be aware of that. The pendulum swing is the pendulum swing once it gets hit, and then it's locked in as that level of resistance. And then maybe we get that, right, to tumble off of that high. So we know we're bullish. Right, toss a tin can in the water. Don't really do that. Just picture it in your mind, right? And then of course we'll look for that, right? Those bulls here, support level. As we pull back, right? As we pull back here, you can already see how, right? That pullback now may give us that falling resistance line here. Now at this point, it's a 1 try, 2 try. Try to use that trend line now, right? For that buy here. If we get really lucky, then we'll do this. It'll go 1 try lower. It'll pull back above the trend line, yeah, and then go 2nd try lower. Then, I really hope we see that, right? I talked about waking up in the morning, right, with anxiety when I was a rookie, right? I dream about this opportunity, right, every evening before I wake up 5 minutes before my darn alarm clock at 4 o'clock in the morning here in Los Angeles, right? I'll tell you, there's only a couple things worse than waking up at 4 o'clock in the morning, and one of them is waking up at 3:57, right? That might be even worse, right? I hate that about waking up early. I love Los Angeles. I love the fact that I have my whole day ahead of us, right? But man, oh man, that alarm clock is ruthless, right, at 4 o'clock in the morning. The bottom line, though, is we are looking to get above that trend line. Hopefully we get this 1 try, right, pull back, 2 tries. But, that's what you're looking for. You're looking for that move lower. You're looking for those bears here. You're looking for all those aggressive sellers here who are trying to predict that reversal. You're looking for that reversal to be predicted. Now we know where their stops are, right, and we can buy right into those stops. And if we can get lucky at this, again, like I mentioned, we may be able to get that trend line down here, get that run lower for that 1 try, get above it, two try, and now we've got ourselves right in that breakout pullback mode where we're using that two try failure, right? We're using that two try failure, but now we're no longer having to clear over that trend line. We can buy off that level of support. We can buy off the reversal line. Again, I really like this area back here because of everything lining up here. Then again, from there, my pendulum swing, right, becomes that big target here for us tomorrow. Now, how do we turn bearish? Right, we got to go strength, pull back to the moving average, and then what? And then strong move off, right? That will give us that bear momentum, find that new low, find that channel, mark up that low, and now we know where those sells are coming from, right? And again, trade a little bit of profit, right? Trade a little bit of profit for a whole lot more confidence, a whole lot higher winning percentage, right? It's that balancing act that professional traders learn, right? Once they kind of grow out of that phase of, I've got to get into everything, right? Once you kind of realize that, you know what? I don't want to try to get into everything. I just want the ones that are easy, that are reliable, that put a little bit of put a little bit more money in my account. Because once you start seeing that you can make a little bit of money every day, just add a few more contracts now and you can make a lot of money every day, right? If you can make a little bit of money consistently, right, how do you think the biggest hedge fund managers started, right? They didn't start with billions of dollars. They made little incremental gains. And then sure enough, people said, wait a second, you're making 10% per month right now. That's insane. Here, take all this money, right? Let me throw money. That's what happens, right? Once you make consistent profits, nickel by nickel, then all of a sudden you got money to play with now. Add more contracts, and now you're making dollars and dollars, right, in tens and hundreds, and it just expands from there. The money's the hard part is the consistent profitability, that little bit every single day. Once you get that little bit, and to do that, you've got to focus on probabilities, not getting into every single move. We'll talk more about that in our free trading course. I do a lot of work with psychology, right, as you can imagine, in that free class, and I think you'll definitely like it. It's linked up again, like I mentioned earlier, in that information box up top. It's also in the description in the YouTube video and below the video here on the blog. Let's grab some gold here. We got two more charts tonight. Then we're out of here to watch some ball. How about some gold? Gold is bearish. Bearish, really? Yeah, I'll explain why in a second. Gold is bearish with a triangle, a hidden channel, and a measured move to work with on the chart tonight. The bears have the momentum after the bulls, right? Big strong move up here from those bulls. Okay, after the bulls tried once, tried twice, and look at them get sold off that moving average. I get this question a lot. You know, what's the most important tool you have? The moving average, the moving average, the moving average. You can learn all about how to use the moving average in that free trading class I keep talking about, right? But one of the easiest ways to tell a bull market is every time price goes below that moving average, it gets bought right back up. You can easily tell a bull market because the bears can't keep the price up below the moving average. That's a bull market, right? Same thing for the downside. It's easy to tell a bear market because we're selling pullbacks, right? But we can't even get and stay above, right, that moving average. This is why I believe moving averages I wouldn't want to trade without it. Let's put it that way, right? I only need a couple tools, not a lot, but the moving average is one of the most important things because when I zoom in on this, right, and I see now that strong move up, I know the buyers are going to give it a couple tries to retest that high, right? Big bullseye back at that high. Right? We know that, right? Anytime we see a strong move up, it's almost a guarantee we go back to retest the high, and we're going to use the two-try rule. Buyers try once, buyers try twice. Now look, after that second try, are we able to get and hold up moving? No, we're not, right? In fact, sellers were going, thank you, hit it, right? And they were selling that sucker. The only thing that would have made this even more of a nail in the coffin for those bulls would have been if this thing would have trapped. Right? If it would have gone above that high, yeah. Well, let's put it this way: if it would have gone above that high, we'd already be down at 1228 right now. Let's put it that way. That's what I'm looking for tomorrow, right? I don't want to get ahead of myself right now, but I think the real opportunity with this is anticipating buyers trying to buy the low of this channel. This is the same basic strategy I'm using on the Nasdaq and the S&P. But remember, the Nasdaq and the S&P are trying to go back into the range, right? Remember this? Coming out of that nastiness. That's not as good as the S&P. The S&P is much more, it's a much better example. On the S&P, right, we're coming out of that range now trying to go back in. We're going to use that hidden channel going with that momentum, right? This is a much different scenario. Here we have a break out of a range. And we talked about this last night, right? If those buyers can't hold this pullback, we're going to collapse back down in. We talked about this last night. Okay, so we're expecting this momentum now to shift hard. The only problem right now is I can't sell here, right? I'm selling now too low. It's too low to sell. We're sitting right where I would expect you're going to be running into a whole hell of a lot of buyers here. So really what I want is I want to see if we can get that, again, one try for the buyers, two tries, right? See that what I'm saying right there? Right? One try, two try. We pull back. The buyers try once. They go, that didn't work. Let's buy it lower. They buy it lower. Oh, that didn't work, right? We haven't collapsed yet, but I think that's because we haven't trapped yet. And that's going to be where I'm looking for that trade in the short term. I want to see us go up, right? And that nice, big, strong signal, right? And sell that sucker right back into those buyers who are probably on their last legs here right now because of that two try to go higher here as well. So I don't want to sell now. I want to look for that sell up and then go. If I can get that, watch that measured move. That puts us right down into that 1228 area, right back into that trading range. What if we keep going lower? What if we keep going lower here? Let me get this out of the way here real quick. What if we keep going lower here? If we don't pull back and get it, what if we keep going lower? If we keep going lower, I'm going to keep watching this now for a channel here. And not really much changes. I'm going to look for that trap. I'm going to look for that two try. I'm going to go trap high, two try, failure back down. That means we've got a trap pattern of a prior high. We have that one try, two try failure pattern as we sink back down. Hey, maybe we get lucky. Maybe we get that. Maybe we get that hidden channel pullback as well, right? One of my favorite combination trades. So trap high, two try, right? Two try failure, and then of course into that hidden channel pullback pattern. It all starts with that move higher though. It all starts with that move higher. Then we use that move higher to sell into that high, up at resistance. The market's bearish, right? Toss a tin can in the stream. What direction will it go? It'll go lower. As it pops up, we're trying to sell it, right? Not even trying to be a buyer here. Now, that is also something we want to keep in mind here for tomorrow. Because how would I get my confidence back? How would we get our confidence back to be a buyer again? Strength. If we see this thing really jump higher here, right? If it really jumps, okay, I'm in. Because that will tell me nobody's going to want to sell this because everyone's going to know they're trying to go back and retest the high. The trick is going to be get it quick. Find that new channel off of that low, right, and get that pullback before we get that retest of the high. The real tough thing is going to be if we go back to retest the high, because from there, now we have to wonder, do we go up, retest the high, and collapse? At that point, it's a seller's market back down to the low of that range. Then maybe it goes all the way back down, but at that point, it's a bull market with a range. Okay, or do we keep going through the high? And if that's the case, it'll probably turn into a spike in channel up here because I'll bet there are a lot of sellers in this market right now who are thinking almost identical what I'm thinking right now and what you're thinking too now. So I would imagine if we run higher, you're going to see all those bears get slaughtered. It's going to punch higher. It'll probably go into a spike in channel. And if that's the case, we're buying off the low of that channel. We're looking for those deep pullbacks into traps, into two tries, right? And we'll basically trade the same strategy just at a higher level, right? You're around that 1246 to 1250 area there for tomorrow. And the big target, obviously, at that point now becomes one leg, two leg. I mean, you could literally see that's going to be a monster rally. And we've had this big bear move down this month. So this could get really good for those bulls. I mean, you could easily be seeing this up around that 1252, 1254 tomorrow within a blink of an eye if we get that strong run higher. I'm not talking about this. I'm not talking about a move up and then back down. No, I'm talking about a real strong move, right? Like a holy crap, there's obviously no sellers here. Let's find that channel, right? Buy it before we get back to retest the high. If it retests the high, find that new spiking channel, buy off the low of the spiking channel, and again, we'll know more about that, right, for tomorrow. So that's the overall plan there. I love this chart. I love this chart. Great chart. This is everything that I love about market psychology. Is you can just feel where you can just see where the pain points are going to be. And I get questioned a lot, why is my strategy different? And I think my strategy is a very simple technical analysis. I think it's common sense analysis, going with the trend, finding levels of support. But I had a coach a long time ago who really beat into my head. There are people behind these candlesticks, and so I always try to kind of put myself, what if I was a bear right now? Where would I start getting pain? What if I was a bull right now? Where would I have bought right here? Right, using that to try, kind of looking into the candlesticks and thinking, okay, buyers tried here, buyers tried there. Wow, they're fully in this move. If they get stopped out, this is going to drop like a rock. These are the things that I'm always trying to give you guys as tools, right? Put that thought in your mind. These are not just price patterns. These are people with lots of money on the line and with greed and fear. Okay, so that's I think one of the biggest reasons why this type of strategy has that edge over other strategies that just simply rely on technical analysis. So definitely, let's keep moving though. I got a lot to cover here still. I want to get you guys out of here. It's already 45 minutes in, but that's the plan there, right, on the gold. Really love that chart. Lots of psychology going on there. How about some more here? Euro. We're bearish on the euro with a trading range, a support trend line, and a resistance trend line on the chart tonight. The bears definitely have the momentum. So I'm looking for opportunities to sell using resistance levels overhead. And with this trading range, bear bias into that trading range, I've got my eye ultimately on selling up above that range. This is nothing new. We've had a lot of ranges the month of October. If you've been watching my newsletter throughout the month of October, you probably could teach the class on trading ranges at this point. In fact, I get a lot of great emails from you guys about how much you love ranges now, so I really appreciate that. That means a lot to me when you guys send me your feedback like that. Good and bad. By the way, if you have any feedback for me of how I can make this newsletter better, I am always listening. You've always got to be willing to use your weaknesses as improvement points, and I would love to hear from you as far as what I could do to make this newsletter better. Drop in the comment section below the video. I would love to hear more. I promise I will not take it personally. Trust me, I've got thick skin at this point in my teaching career. I've been called every name under the sun. So bottom line is, let me know your feedback. So that's my trading range. The trading range is a bear bias. I want to sell with that two-try failure pattern, right? One try, two try, and I'd like to combine some levels of resistance. Now, we've got this big trend line coming down here, right? That's a key level of resistance. If I had to guess right now, I would guess that's going to be our big level tomorrow off that trend line. And then another kind of little hidden gem here is if I take this trend line here and bring it up there, you'll notice it really fits in. This would be a flag pattern. This would be a bear flag. It's a bull channel in a bear market. How do you trade a flag pattern? You sell off that high. So it definitely lines up nicely with the top of that range, with that resistance trend line coming down. There's a lot of reasons to really like that 15,500 area, and that's definitely where I'm looking for my selling opportunities tomorrow. How do we do that? Well, we want to see price get up. Now, of course, with that momentum going higher, anytime we see a strong move in one direction, those traders, these buyers will want to retest the high. So I always want to wait for that strong move up, let them try to buy it again, make sure they come back to that moving average, then I can sell, right, once I start seeing that failure, right? Once you start seeing it crash below, that's when you know, right, we're headed back lower. That'll be right about there, right? So that'll be where we're looking for that good signal, sell that sucker back down again. The hardest part, I think, tomorrow is going to be if we kind of sit here tomorrow. The euro's been kind of crummy lately. It hasn't been really active. You'll notice they barely moved here. So we got that trend line here. You don't want to force it down here. You want to wait for it up, 1, 2, right, and then back down from there. As I talked about earlier, we got to be careful with those buys off the low because it does tend to get sold right? So you want to go up, sell right there. A lot of sellers will come in there to sell that breakout pullback. I'm not trying to do that. We get that big round number at 15,000. We get that rising support trend line here. I'm not trying to be a seller down here. If we do break through it, we have a measured move to look for. 1, 2, 3, right? There's that measured move down at 14,300. And then again, usually what it looks like for a breakout is it'll go boom, bang, bang, right? We'll find that new low, find that new channel. How'd you like those sound effects, right? That's right. Reminds me of the old Batman, old Batman. I'm really dating myself right now. Remember when Batman with what's his name used to be on television at 3? What was it? It was Saturday morning, Sunday morning, right? Gosh, what am I? 38? Yeah, almost. Yeah, I'm 38, I think, right? So I'm really dating myself. I was like a little kid, right? Those wham, kaboom, bang. Anyways, I'm sure some of you guys out there are old enough to remember. What was that guy's name again? What was the? Gosh, it was like a good old American name, right? It was like John Kent or Adam West, right? That's who it was. Yeah, right. So, surprise, right? You're either from the UK, right, or you're from the US. But the bottom line, though, is, anyways, I don't want to get too much off topic here. I'm sure you enjoy my sound effects on that. Find that new low, find that new channel. Sorry, guys, late in the day here. I've been here since 4 o'clock, and we'll sell off that high, and then again look to sell off that high, right down around that measured move. Okay, guys. So again, 1, 2, 3. Find that new channel. Now you get the breakout. Now we can sell off that high. Bing, bang, bing, bing, bang. Oh, you know, if you're here at this point in the video, you love my stupid humor by now, right? If you're this late in the video, you're as sick as I am. That's for sure. Anyways, got a great plan of attack for tomorrow. We are looking forward to a great day. We've had a great week so far in our trade room. I am almost an hour into this video. Let's wrap it up here, guys. Don't forget. I have everything you need to be successful here as a new trader. I've got a plan. I have a great trade room to show you to do it, right? And I'm going to make sure that you are doing this the right way, making sure you trade that profit for probability, making sure you use market psychology to your advantage. If you want to learn more, we've got a great free trial here at School of Trade. You want to learn more? I get that great free trading class. It's linked up in the upper right-hand corner of this video. It's also below the video on our blog. You can learn more about becoming a client with our beginner, intermediate, advanced classes right on the homepage here at School of Trade. And as always, right, don't be afraid. Don't let that ugly mug scare you away, right? Grab that toll-free number. Give me a call anytime here in Los Angeles. Look forward to speaking with you guys about your trading career. My name is Joseph. Great job today. Great job. Great newsletter. Great plan for tomorrow. I hope to see you tomorrow morning, 8 o'clock Eastern time in our trade room. If not, we'll do it all again tomorrow night. The big question is, who you got in the World Series? Are you a Sox fan, or are we going for the Dodgers here tonight? I don't know. I've been living in Los Angeles for almost 15 years now. I grew up in New England, in southern Maine. Yeah, you couldn't tell that, right, until I start talking about it. Once you kind of hear I'm from New England, you can all of a sudden hear that accent. It comes out of my eyes a little bit sometimes. I always tell you I left the accent on the plane when I move west. It's going to be some tense times in the James household the next couple of weeks. I'll tell you, as we've got both teams. I decided, though, I'm happy, though, because no matter what happens, one of my favorite baseball teams is going to be a World Series champion. I got to say my heart's with the Red Sox, but I'll tell you, I love the Dodgers. I would rather go to a game at Dodger Stadium than Fenway. Don't tell that to my father, please. Dad, if you're listening out there, I take it back. But who you got tonight, right? Who's your team who's in the series? This is going to be some great baseball. Hope to see you guys tomorrow morning. Enjoy the game tonight. I'm out of here. Adios, amigos. Bye-bye for now.